Hey everyone, I just thought I'd do a quick update on close because it's quite interesting. There's a lot of really bullish things, um, but it does look like we're probably still going to get that drop. So just looking at Sol BTC strength, it managed to close up over top of the break level on the daily. So all that needs is one day in accumulation, close. So it could go down for 23 hours or whatever, come back up, and if it closes one day and hard closes that level, then it's going to bounce off to the next one. So it's a really bullish place to close, but it doesn't mean it's hard closed anything yet. But at least it can, which is sort of what I'm looking at. Um, but if we did get some kind of big final flush over the weekend, um, this really has the ability to, even if it doesn't actually hard close this top one, it has the ability to hard close the trend. Um, it has the ability, say, in one more day to still hard close all of these this level down here, lower down. So yeah, it's a really bullish place and it gives it options. Um, Looking at dominance, cool. We closed down under everything, and as you can see, we came back up to do the retest, which is that little sort of bit of weakness that we just have had in the last sort of 4 hours. So now the question is, does it hover around here or does it reject and go further? If it rejects and goes further, we're going to see the alts sort of pumping, even if BTC has weakness, which is really interesting place to be because that relates very clearly to what you just saw on the Sol strength chart. So BTC never closed above its daily break level, so it really had to be over 117,500 to get out of this two candle distribution range. But it did make a hold level down here at 114.2. So it may come down here, hit this, have some kind of bounce back up. It hasn't moved any of the localized trends or anything, so it's sort of just really nothing. It's just a limbo sort of close on the one daily. If it does dip, we should be able to get a bounce. Um, and if it goes up and hits the break level, we should therefore be able to get a rejection. So it's yeah, it's not bullish. It's not completely. I mean, it's not going to fall off a cliff, but but yeah, it's not really bullish. Uh, 2 day made a hold level and closed above the trend. So this is the time frame that makes me sort of think we're going to go up and we're probably going to induce some liquidity, and then we're going to potentially go up and take those positions that are sort of around that 118.5 through to 120. So it's just like, do we go down first and complete whatever swipes to the downside? We're still above the trend, so we could go down, maybe reject down to 113 and then bounce up and take all that liquidity, which by then there'll be heaps of it up there because everyone will just think, oh yeah, we're going down again, we're going down again. Um, so the 3 day put a hold level there at 119 to create some kind of rejection back to trend, and we held the trend. So this suggests that we might come down to that 114, 115 area again, and then roll back up to that 119. So it sort of looks like they're just setting people up for a bit of a trap, really. Um, and that hasn't really done anything. We're still in the range trend, so we can come down to about 112 on that. We haven't broken the topside trend yet, but we have actually opened the candle in a position where it can. So if this was to sweep the liquidity to the downside here, do some kind of big push, hit those lower levels that we sort of really want to see hit before we get sustainable continuation. Within the next 6 days, it could come back up, break the trend, and go. So it's yeah, in a really interesting place. It is a loss of that interior trend that's running up there, which because you've got this loss of this interior trend, it is hard closed underneath it, then it should dip. And so this might just be what we're going to see is maybe in the next 6 days we go down and tag these levels, come back up, hard close, break, and go. So it's sort of almost painting a little bit of a time frame um, possibility on things. And that would mean for this, it's free of the trend, so therefore it can dip down and touch those levels that we want to see touched, but it's not. If it gets back up and it's gone above trend again and goes yellow again in the next 9 days, then, like I say, it can go. Um, and we've already had the first touch resistance rejection from this range trend up here, so that candle should be able to get up over that and then take off. So this created this range trend. So we've now got that rejection around that 125 area. That still makes sense. Like if we were to sweep down, this is literally just in the middle. You've got all the reasons to bounce sitting down here between 110 and 108, and you've got all the reasons to reject sitting up here at 125. So this is going to be just a beautiful play. Like if it comes down into here and we load up positions and we just ride it up to there and we TP, that's gonna be, and it may push through that, but because it hasn't, like on this time frame, the interior trend is not hard closed blue. So if it can come down, tap this, load up, come up here, have some form of rejection, and then recover that uptrend in the next 13 days, then boom, price discovery. So it's so that's looking. I think it sort of fits the thesis of they're still gonna take some lower liquidity, but they've now got these timeframes they can work with to go and continue on. And so on the 18-day time frame, we're up above the support trend. It might work down, touch the levels, and then just go up, and it'll have some kind of first touch rejection up here, about 125. And this one's lost the uptrend, which means it should travel back down to those same levels that we're kind of expecting. And then, yeah, and it's rejected off the backside of that trend there. So that's exactly how we thought that close might play out. So yeah, we could still just come down, hit these levels and bounce, come back up through the trend. So this is the first one that kind of potentially has a topping sort of price point on it, because it may want to retest the backside of this trend which has been lost. So if we come down here, bounce this, push through this resistance trend, and then come up to wherever it might be given when it touches. So let's say it touches it straight away at like 131, then that could be the top. Maybe it touches it at like 140, 150, whatever. Depends when it gets there. So that's possible toppy type thing. And we've still got this interior trend we're holding here. So we dive this, we grab the liquidity, we go back up, but we're from the underside. Now, on the 39-day, because we're from the underside, that again shows like blow off top type structure. But it's probably not going to happen until the hard close or the closure of the 39 days. So it could go up for 39 days, keep traveling up into the sky. Everyone screams euphoria, and then you could even get a second candle out of that. It's really the fall over and retest of the trend would start after the hard close of it, or it would be right towards the end of its time frame that it would start to pull back down, and that's where you get those big long wick type sell down candles. But either way, it gives us a bit of a timeline, and it shows that we still do have that support. But as you can see from history, it's not like it doesn't dip and take the liquidity. But what you do note is that it takes the liquidity before the pumps. Takes the liquidity, pumps. So now if we do go down to that 108 sort of level, so we go down to there, the 108 level, that would be taking the liquidity and then pump. So it's long-term bullish. And we've closed above that trend, so that was never going to be able to fully retrace. And we're not moving it up, so there's not actually a creation of resistance with this, so it could come down. Still, it's all that 108.3, 108.5, 110. It's all in that area. So yeah, we can come down, retest that, and go. And so again, like quite a bullish closure. It just snuck up to close just over the 200.170, and then we've rejected back here to retest this daily break at 195 point something. There's also like a range trend kind of in that same area, and it might be a normal trend down from there in that same area. And then it's just sort of hovering around at the moment. I mean, if BTC comes down, this will come down anyway, but it's just looking so strong. And it's like when BTC just took that little move to the upside, didn't even break out of its daily range, and then look at what that did for Sol. So this is the kind of thing you should expect in a real alt season. You get a little bounce on BTC, and whoomfa, the alts just take off. So that's it's closed in a good place. So it might go down, or maybe even within the next 24 hours, we hard close that top level. And if we hard close that origin level, it'll fly. So that'll be definitely worth keeping an eye on that one. And same thing here, really. We opened up above, we shifted the trend. We've hit some resistance. We've come back down. So we're testing that. So we've hard closed this really old level back down here for the second time. I'm sort of thinking that maybe that 189 area, 188, 187, there's a lot of confluence with support trends. There's some new hold levels that have formed in there. I think that could be a possible place that it could push down to if BTC does its dive. And um, but it is starting to look very difficult for this to get down to those 170s just currently. And I mean, the market can change. Um, yeah, good old bit of FUD and bad closure and that kind of stuff. And we are still, based on this, we are still rejecting off resistance, but just got so many options for support before you even come down to the 170 levels. It just seems a bit tricky for it to get there. But the thesis is still possible because this, if you wanted to retest this downtrend, which has just been hard closed, well, that would be 170s to get there. And if it, in doing so, if it lost this uptrend here, which is supporting it currently, well, then it would have to come to this trend, and then that's sort of 160s, 170s. So it's still possible, but it's just looking so strong. It would have to really, there'd have to be some kind of very specific soul weakness develop for it to start moving down there. And this is probably going to be more of a move that would potentially play out relatively quick. So we've got this new range trend that is now in play in the top here. We haven't touched it. I've checked this on a lower time frame. So it's sitting up around 201. Now, if we touch that, then we've got this new hold level that was also generated today down here at 189.526. So this could be some kind of weekend move where we either go down first, then up. People chase the longs and it builds the liquidity, and then we reject the trend and then come back to the main trend. That's entirely possible. Yeah, or we could go up and then down, and then the hold level would have to try and hold up the price. So we haven't lost that interior. This looks like it is a liquidity sweep of that interior. So that sort of suggests that somewhere in that next 3-day period, this thing's going to be pushing back up again because it's completed this sweep. So just like you saw on those other time frames, it can just cling to the back of these trends until it gets back over the top of it. But it's just another real sort of bullish closer. We've hit all these break levels. We've opened up new candles above the break levels. We've now just got to hard close them. And same thing here. We hard closed. We're under trend. So it's on the 6-day time frame. We've got that trend as well. So it's the new main interior trend has moved up. So that could indicate rejection around 201, which sort of lines up with the 3-day range trend. And 195 would be a level. 179 would be another level that I'd be looking at for this. And it's the second time we've hard closed that 179 level. It's looking strong. There's also a range trend there. And this range trend has not technically had a retest, I don't think. So if we look at it on something a little bit smaller, like a 4-hour time frame, It's down here. Yeah, it's not at a retest. So two hard close candles above it. The break of the 6-day range would be 161 because that sort of roughly lines up with the bottom of that third accumulation candle, start of the ranging. So it's totally within the range. So like if you've seen the stop loss video and I say don't put stop losses or liquidations within the range. If we if we push up and reject this 201 trend and push back down, the range that the price can travel within is down here to about that 161 area. And realistically, because we haven't hard closed it, the top side of the range is sort of that area there. So anywhere in that realm, it could travel. And in there, we've got a trend we could retest, which would be sort of the 180s. We could travel back to the support trend, which has a crossover of 171, where it crosses over the range trend to be retested. And it's spooky how many times you'll find that price comes and finds these things where they cross over. I sort of refer to it as price is lazy. It just, if it's going to go and bounce off something, it loves to bounce off multiple things all at the same time, rather than go up and down, up and down, up and down, and testing every one of them individually. So yeah, that could still go down. But it is also fair to say it could just bounce off this break level and we may never see under 195.231 again. It hasn't actually touched it. This bounce is some other lower time frame thing going on. So sort of watching this 4-hour candle here to see if we close under that 198.8 level, because that might at least give us a 4-hour hold level and justify some kind of move to trend. But the wick on the bottom of the 4-hour candle is so big that if we find our 4-hour trend to here, is why you got to be real careful with using the lowest candles for trends, because this is not the trend. It was a sweep of the trend before the pump, and so the lowest one that is in the line is not always. If I just assumed it was that and started there, I'd be wrong. So this is the trend, and this is going to be a hold level up here if it closes like this in the next 20 minutes. And so there's going to be a fight between the hold level and the trend. And if it breaks the trend, then yeah, cool. We might then start to consider levels like a backside bounce level, 188.637. So that'll create the accumulation cycle to create the downtrend from the more lower time frame downtrend from up here. So that has confluence with some of those other levels we're talking about. It's a backside 4-hour. And then we've got the front side to that, which is over here, which is that 183 level. And that's sort of got confluence with a retest of the other interior if we lose this one. So there's definitely some structure here and some good trades that can come from that. Bigger time frame, yep. Again, it's not an accumulation close; it's a distribution close. So we didn't hard close that level, but we did open the candle on the other side of it, and it's a 9-day time frame. So we have 9 days to go down, go up, hard close, and that would be hard closing trend. That'd be hard closing, well, maybe not quite trend, but that would be hard closing the break level. It would be opening above the trend. So that's so many signs point to we can go up. 13-day time frame, 188.6. That's confluence with the backside bounce that we should get from the 4-hour. It's got a fib trade in here. It is a high risk fib trade because it's on the front side of the range. So if you've watched those videos or listened to me about that, that's our front side. This is part of the front side. So it's a high risk one, but it's got confluence with the 4-hour and it's within the scope of the trend. You just have to be a little bit careful because it might stop just short depending on how much time it took to get up there. And it's a 13 days, so it can take a lot of time. This sort of move actually it's all kind of fitting in with let's go sweep liquidity and then go up like that. So that's looking good. so many things that are looking good here for this actually having a decent move up after potentially just taking some liquidity. And we've got a backside front side combination on the 18-day, so that gives us a 179.34 area as a bounce, and 175.835. So we haven't touched the trend that moved today, so we broke the trend. And just, I think in my last video I said this price, this break of trend means that the price wants to go and test these upper levels, these 240 levels. That's where it wants to go. When they have wicks on the tops of the candles like that, it slows down its path because it will hit these and it will reject back to trends or hold levels, to then have to come back up and get over these trends again. So if this was ready to go real parabolic, you would not see these wicks. You would just see flat top candles, and then they would open like that on the other side of trend, retest the trend, and go. And that's banana zone, as they call it. So this is not banana zone, but it's got the intention to keep traveling up into these 240s. It's just not ready to do it super fast yet. Beautiful. Look at that. 26-day broke trend. Amazing close. Trend moves. Trend is now resistance. That's about 209. Okay, so it's still got the support trend. So this could bounce between support trend and 209. So that could be a big move, like in the 180s up to 209. So and because it broke the trend, it wants to go to these levels. I sound like a broken record, but this should be going up to the 240s. Just fine. And same thing, 39-day. So trend is sitting at 201. Support trend is sitting down in 182s. There's various low time frame hold levels in here and backside levels. There is this high time frame level down here at 147. You'd honestly have to have some really big FUD thing for that to go to that. But these are the types of setups that exist, and if you have an announcement around a nuclear weapon going off or something really bad that the market just has not dealt with, then these are the ones where the wick just dives through and then comes back up to trend all within 39 days. And so they're just like your generational wealth buying opportunities. It will literally just hit this to the cent. It'll just wick all the way down, grab it, and go. Sometimes it's just a good idea to have orders sitting on these because they're just, you never know if it'll happen. So, yep, this stuff is looking good. Yep, we're up above the 78-day trend. It could come down and retest that 177 sort of area again, bounce off the back of that. There's also a range trend through there. So that's a normal trend and a range trend, so that's really powerful if it bounces off the back of that. And then it would travel up into the 240s, 250s. So that's looking pretty good. And then if it can close above this origin level here at 204, and maybe that's our next laddering point. So if we come up to this trend, we close there, we come down, we ladder off the back of the origin, we blow through the whole top of this thing and go up. So that's yeah, that's my update. So if you're wondering why I say bullish close, it's because when you look ahead at what options the price now has to move, it's yeah, bullish, very bullish. Doesn't mean we don't go down. In fact, if it does go down and it sweeps the liquidity, it usually means you've got an even bigger move coming. So yeah, enjoy. Cheers. Bye.